Ladies and gentlemen, welcome to Trades by Brent. We're day trading the S&P 500. I hope you're doing well. I'm Brent. Hope you are good wherever you're streaming in from. Make sure you let us know in the comments where you're streaming in from. Where in the world are you watching? Put it in the comments right now. This is what we do live. Maybe you've seen some of my trade reviews on the YouTube shorts. I don't know how you found me, but I'm happy you're here. And I'm going to give you a little taste of how I trade. This is a bear trend. See, we went down. Okay, we'll make that red. So you had a lot of consecutive bear bars. Those are black on my chart. They're probably red on yours. That's a 66-point move down. Okay, and then we went sideways for a while in here. And now we moved up. This is a bull breakout. 1, 2, 3, 4 consecutive bull bars. This is a 5-minute chart, if you're curious. And notice how these bars are stacked. Do you see how the close of this candle is not even overlapping with the next one? And then the next one, it's like barely overlapping, maybe like a centimeter, right? And then on the next one, it's not overlapping at all. You see the closes? So that shows strong buying pressure. And also, another thing to note about this breakout, do you see how all the bars are about equal in size? First of all, you notice how the third one's bigger than the first two? And then the second one's about equal size of the first one, okay? And the fourth one, it's not that much smaller. So they're all around the same. And you also see some acceleration to the upside. So what you want to do when you're assessing a breakout is say, how strong is the breakout? It's hard to learn how to do that. It's taken me a long time to kind of get the discipline around that. But in my way of viewing the market, which is very Al Brooks inspired, he says, assess the breakout. Okay, so I thought this would be a buy here because the bears were not able to get followed through. So we're weighing the options here. And the one hand, we have the bull case, and the other hand, we have the bear case. Okay, now we went down 60-something points. Then we went sideways for a good while, at least 15 to 20 candles. That's typical. So now the odds are back to 50-50. We're about split. Okay, because the more you go sideways, even if the trend has been really strong, as it is, 60 points, decent move down. We're back to 50-50. Okay. And then what happens here, this line to here showing we got our first higher low, okay? And then a strong bull breakout after all that. So the bull's taking control of the market now. Now the next thing we want to look at is the strength of the pullback, because this shows you that the bulls are strong. This shows you that the context for the bulls taking over control is strong because the bears got their profits. They're stepping aside. And now the bulls are coming in and saying, we're going to own the price and we're trying to push the price up. The next thing you want to look at, as I said, bull case in this hand, bear case in this hand. We got to weigh the options, okay? So look at the size of this pullback. Now notice, were there 2 candles on that pullback? Did it last 2, 3, 4, 5, 6 candles? No, it lasted one candle. Okay, the best the bears could do was one close. So that doesn't even really show bear strength per se. 53, this guy, probably shows more like bulls taking profits because we had a strong move up. And after you get a strong move up, the bulls know, well, let's take some profits. But they didn't even take that many profits because look, the candle couldn't have been closed below the prior open. Okay, so bulls still in control. Now, next thing, the bulls came right back. Okay, so that shows the bulls in control. And then what happened on this candle? Another little teeny tiny bear close. Okay, so this is bullish as far as I'm concerned. That's why I have my bull tool out. However, this overall looks like a trading range to me. Look in the daily chart, okay? On the left, you have the 5-minute chart. On the right, we have the daily chart. Yesterday, we had a doji, okay? So that's a trading range. That's on a daily chart. This is yesterday. We're going sideways, okay? And we went down quite a bit, but then we went up in the morning, okay? So a little bit up, a little bit of down, about 50-50 overall in the day, about even rather, okay? So since we went down and there's buying pressure down here, there's buyers down here. Look, there are buyers down here. So this candle tried to move down here and the bulls pushed up. So that shows there's buyers down here. And then the price came back into that area the next day. This will be yesterday, okay? And again, there are buyers in this area. So we see this area as a support area, okay? So that on the daily chart's around here, and that's around here on the 5-minute, okay? So we could buy here, okay? But the question is like how much, the question is how much more up can we expect? And I think it's hard to say at the moment. Also, another thing to note, which I didn't mention. Do you see how I drew this line here that says 50% of the bear? So this move down, if you measure, okay, from the top of the move to the bottom, that red line on my chart is going to be the midline, which is 50%. Do you see how we're right around there? Which is right here. Okay. So for the traders that are trading this on a higher time frame, like let's say the traders who are trading the daily chart or maybe even the hourly chart, we can take a look there, right? They see this as a bear breakout. They see this as a 50% pullback. That's a possible re-entry short, okay? For the bears that are still holding here, or they want to re-enter, okay? So 50% pullbacks are very commonplace, and they're one of my favorite things because it's like, can you measure half? Do you know what half means? I mean, who can't do that, right? You know what half means, right? All right. Okay, so bull breakout, transitioning now into a bull channel. Reasonable long entry there, but doji. So reason to think that maybe we go sideways here instead of continuing up. I think that's a little more likely, but this could just be a pause. And we've got open gaps here, right? Like we came down to test maybe here, but didn't even get there. So I think I'm back to long now. Yeah. All right. I would take a long. But I'm going to wait, right? There's something called intuition, right? And what that means is like, sometimes your instincts know better than your logical brain, and it takes your logical brain a little bit longer to catch up. So I don't like this entry, and I'm going to trust that hunch. Got a hunch about it, and I'm going to trust it. So I'm going to sit on my hands for now. Also, this is, you know, if we went down and now we're going up, this is overall kind of, you know, trading range price action. Yesterday was a trading range, right? On the daily chart, right? We're moving into this kind of chop, right? You know, doing something right in the middle is probably not the best idea. So, you know, if we see something bearish here, I might consider reversing the short. But we're still bullish. We would need to see like the bears really come in strong here at that 50%. So let's see. $12 on the candle close. Let's check my levels here. Trading range price up. All right, good. All right, so bears starting to get some selling pressure. They've got one close here. They've got one close here. The bulls slowing down. Potential short here, but not enough to make me want to get short.
Hey, Juice, let me know, sir.
This should be yellow. Trading ranges, I go yellow because they're neutral. The way I'm seeing the market, this is just, it's not a great location to do anything. Bears coming down to test the breakout point here. Failing. So gap stays open. And if you don't know what I'm talking about, look here. Do you see how the price did not even get down here to this prior high here? Okay, so bulls get coming in, buyers coming in. Technically still in a bull trend because these are higher lows. You see that? So yeah, that would be a bad sell right there. Not really a sell in hindsight. So I'm going to delete that. Two things we got to consider when structuring a trade. One is context. So that's what's happening to the left, right? That's why I have all this stuff marked up. You got to know what's been happening and take a look at that. Second thing you got to consider is the momentum. So what's happening right now? Where's the momentum? And where's the momentum right now? To the upside. So that means buying. You know, I was starting to see selling pressure here, but that's not accurate. So I retract that now. I'm like, you know, why don't we wait for 2 consecutive bear bars? Right, consecutive bar shows momentum. And notice that since 48, okay, look at 48, since we broke out to the upside. The bears have yet to get 2 candle closes in a row. Okay, so that means the bears are weak at the moment. Bears weak, bull strong. A lot of training is waiting and watching. If you're not comfortable waiting and watching and just hanging out, pick a different hobby. Currently my position is long. I mean, I don't have a position, but my bias is long at the moment. Right. So like that's a reasonable long entry in my view, but I don't know. Not convinced. I'm gonna cancel that. Trend resumption late in a trend. It's not a great trade, right? So one possibility is that this is a leg. Well, not this is not. This is a leg. It's not possible leg. This is a leg, right? You get consecutive candles in a direction like that, and oftentimes a leg. This is a very strong leg, and oftentimes you get a strong leg like that, you usually get a second leg. So I think at the moment we're going to go sideways and then possibly, you know, the bulls get another leg up, a small leg maybe at the least. So I'm going to keep my long bias. Okay. I'm going to consider getting long at the bottom of this little chop trading range here. At the same time, I'm going to consider a short. Okay. I'm not really strongly bullish. And I do not have a reason to enter short yet. Okay. So not super convicted on the bull position. Zero reason to take the sell at the moment. And nothing enough to convince me to enter. We got reasons to enter long, but not enough to convince me to risk my money. Now, if I entered on 50, 51, even 52. But at the moment, we've got to move up. And we're going sideways. Let's see how 59 closes. Also, important to consider time of day. It's 11:23 a.m. Pacific. Will the bulls find buyers down here? Probably. I mean, unless 59 is super strong. What's our ATR? 6? Okay, so maybe a long scalp entering, you know, a little bit down here. Consider that. Reasonable to expect to pull back to the EMA. But if the bulls are buying above the moving average, look at all these closes above the moving average. You know, they'll probably find buyers down here if we do get a pullback. Unless the bears do something convincing. So let's just see. Minute left on the candle. I keep this guy by my desk. It's a good reminder. You just sit and be patient like the Buddha. Man, it is hot here. It is hot here today. How's everybody doing in the chat? Shout out to my man Victory Trades. Shout out to Nocturnal. Nocturnal, no, I do not trade options. I only trade futures. Where do we go tomorrow? I don't know. It depends on how the day closes today. If the day closes weak like yesterday, right? If we get another very weak doji, then I think we'll probably find some buyers tomorrow. Okay, so now we have a higher low, right? Reason for that bears to enter. But again, still no consecutive bear bars. Which means I think we'll probably find buyers down here. Although we could come down and test this guy or this guy, right? So I'm going to execute a long order here below the trading range. Looking for a 5-point scalp. Simple. Just a little tester here. A little small, little tester. I want to see if there's buyers down here. And I think there will be. But there might not. If I'm placing a trade, I'm saying I think it's more likely than not we find buyers below this little range here that I have marked in yellow. So you can see the long position on the chart. Looking for a 5-point scalp. I have my risk twice that. I do not plan on letting that stop get hit if this trade does not work out. So if this trade does move further down, I will tighten that stop. I'll tighten the stop no matter what. Okay, and we're filled. Let's see if we get the bounce. You know, it's almost always reasonable to expect a test of the EMA. All right, so we're long expecting a bounce. We'll either get it or we won't. I try to be neutral anytime I enter a trade. Emotions will cloud your judgment. So just a good idea to be neutral. It's like, okay, it works or it doesn't. That's it. With my beats. Simple entry. We've got a bullish context. We've got sideways price action. Bull breakout sideways action, and we're expecting to find buyers below this little range here. Let's watch this close. 10 seconds left. Bears now have 2 consecutive closes. Okay. So momentum now is coming in. Now there's reason to be short. Which means we will want to tighten our stop. But this is where we would want the bounce. So let's see if we get it. Okay, now tighten my stop to a little bit below that EMA. That's what we want to see, guys. But again, maintaining neutrality. So nothing goes until the candle close. So I'm going to wait to get excited about anything until we see some data here confirming that the bulls are actually going to buy and continue buying. So 2 minutes 20 seconds left on the candle, getting close to that profit target. One tick from our, and we did it. All right, baby. Oh, 5 points, 5 points, 5 points. Okay. Like I said, neutral. It works or it doesn't. So in that case, it did, and exactly what I expected happened. Now, that doesn't always happen. In fact, often the market does the opposite of what you expect, and you got to be ready for that, my babies. However, strong bull breakout. The key to that trade, I believe, was good data. Now, this guy here, okay, this guy here, after the bears sold 66 points down and got exhausted, okay, and then the market went sideways. All the energy's gone from the market. So that gives the bulls an opportunity to break out. Now, the key here was to assess this breakout, and that's why I have this marked in green. If you want to study something, study Al Brooks' method for how to assess the strength or weakness of a breakout. Now, a breakout's going to be either weak, strong, or kind of neither, okay? This is a strong breakout, and I pointed out to you guys why. Do you see how the candles are stacking like Lego blocks? That's a strong breakout sign. Here's the biggest one. Do you see how the candle sizes are getting bigger? Do you see how this third one, see this 3 in a row? And the third one is bigger than the first 2. And then the second one, I don't know if it's bigger than the first one, but it's about equal. Yeah, it's probably bigger than the first one. Okay, so the candles are getting bigger, accelerating momentum. That's another sign of a strong breakout. And then another sign of a strong breakout, well, actually, after we assess the strong breakout, then you assess the pullback. Remember? Bull case, bear case. We hold one in each hand and we weigh the options, okay? It's like a scale and you got to see where it tips. So if we have a strong breakout, that's good. But then we look and we say, okay, how are the bear closes weighing out that data point? So I noted here that the bears were not able to get follow through. So look, you're using data saying consecutive candles and candles that stack on top of each other and candles that get bigger in size are a sign of strength, strong momentum. Yes, for the bulls, good. Then we look at the bears and we apply that same stuff. Do we see any of that stuff? Do we see the candles getting bigger in size for the bears? Do we see consecutive candles from the bears? Do we see stacking candles from the bears? None of that. The bears couldn't even get 2 consecutive bear bars. Okay, so that means there's no follow through. That's why I put no FT, no follow through. Okay, and then the bulls came back with a strong candle here. Okay, so the bulls are like, fuck you, we own this town. Right? And what that tells us, if we put all those things together, is that this is not really bear strength at all. This is the bulls taking profits after this strong breakout and then buying some more. Okay, so that's a sign that bullishness is here and that buying pressure is strong, meaning buying long. Okay, then we went sideways and we're watching to see if the bears get momentum on the next candle. Do the bears get momentum there? No, they still couldn't get consecutive candles. Then here, do they get consecutive candles? No. Then here, do they get consecutive candles? Yes, but we were already ready to enter long here. So we took a little bit of a risk, because if the bears got another strong candle, and they also could have tested down to the moving average, we're risking that as well. But that was a risk I was willing to take, because this candle came down to test this area and failed. And then, you know, these candles came back down to test this area, and every time we actually get in higher lows. That's why I drew this line. Okay, so you know, with trading, you're putting all these data points together, and you're taking your best guess, and then you're letting the market tell you what it's gonna do. Okay, so that is my best instructions for how to structure a trade. You put your data points together. You give yourself some time to observe and really get a sense of what's going on. And then you put all your data points together and you make your best guess, and you let the market tell you what it's going to do. Okay. And in this case, we had a 1-to-1 trade. So, you know, we started with a 10-point stop. We moved that to about a 5-point stop. So that's about a 1-to-1 trade, okay. So that's a reasonable trade. 5 points risk, 5 points reward. We got that 5 points, we got out. That's my analysis. And as I said, often the market does exactly the opposite of what you would expect. So you got to be willing to just go with the flow, baby. You got to go with the flow. But in this case, my Buddha kept me calm. My head kept me strong. And we got those 5 points. And then we shake it off and, you know, move on to the next trade or call it a day or whatever. So I'm going to leave it there. Now, if you're interested in this strategy broken down in detail, go on my channel and watch the video entitled My 3-Step Scalping Strategy. I break down this exact strategy. This is how I trade trading ranges. Okay. I look for a trading range. I look for a context. I try and trade in the direction of the context once the price comes either below or above that trading range. And I break this down for you. And I even do a PowerPoint presentation where I walk you through step by step how I execute my scalping strategy. Go check out that video. Also, if you're curious about the tools that I'm using, you can get the link in the description and you can check out TradingView. And also I'm trading right now with Top Step on their 50K account. So if you want to get funded by them, you can prove your consistency and they'll give you a 90-10 profit split. You make 90, they make 10. That's a pretty good deal if you ask me. And if you also want to get some more details on my strategy, I have a downloadable PDF for you, which you can hit the link in the description, tradesbybren.com/3setups. That is also on the screen or in the description. And I'll give you a downloadable PDF with my 3 favorite setups. So those are all the gifts I'm offering. I do it just to say thank you for subscribing and being a part of this Trades by Bren family. And thanks for being here. I'll see you next time. Peace.